Alright guys, one another revision guys. Accounting standard 11 guys, AS-11. Very small one guys. I know guys what the standard relates to, you are supposed to listen to it. So AS-11 better deals with the effect of changes in foreign exchange rates. AS-11 guys covers accounting for three important things. One is foreign currency transactions, the other one is forward exchange contracts, the third one is such beta is foreign operations. AS-11 as such beta does not apply to how are you supposed to present all of these items guys in cash flow statements. And then if you were to convert home currency financial statements into foreign currency financial statements for the convenience of users, even that is not covered as such guys. It does not specify the currency in which you're supposed to present your financial statements. However, if you are not using your local currency beta for presenting those financial statements, you will have to specify the reason. Also, to the extent those exchange differences are covered under AS-16, you cannot apply AS-11. What is that? We will learn under AS-16, you will not know now. If it is covered by AS-16, it is not covered by AS-11. If it is covered by AS-11, it is not covered by AS-16. You cannot apply both the options. Usually entities follow AS-11 only. They will not apply para 4E of AS-16. वहाँ पे और एक आएगा. We will learn about that. Now, talking about guys, the standard. The first thing that I told you better that you should be knowing is what are monetary items and non-monetary items. Monetary items are cash and bank balances and assets and liabilities that are receivable or payable in fixed or determinable amounts. Basically, you should have the right to receive a fixed amount of money or you should have an obligation to pay a fixed amount of money. Examples of monetary items that are debtors, bills receivable, creditors, bills payable, investment in debentures, cash and bank balances, loans and advances, debentures issued. Alright guys. Any item that is not a monetary item as such beta will become a non-monetary item. Are we clear? After that beta, you should know what is reporting currency, what is foreign currency. The currency in which you're presenting your financial statements is called as your reporting currency. Any currency other than reporting currency will become foreign currency. So sitting here in India as such beta, if you're presenting your financial statements as such guys in say Zimbabwean dollars, that will become your reporting currency. Anything other than Zimbabwean dollars beta will become foreign currency. Mazak mein bol raha hu, you will not be able to do that. Are we clear? Next, moving on to accounting for foreign currency transactions as such guys. I said any foreign currency transaction beta, there will be three parts. One is transaction date, the other one is balance sheet date, the third one is settlement date. As on the transaction date, you're supposed to record every foreign currency transaction at the exchange rate that is prevailing on the date of transaction. Alright. Iske baad mein, if an amount is still receivable or payable, that is if there is a monetary item in relation to this, then comes balance sheet date, then comes settlement date. If the amount is settled immediately, beta kahani khatam. There is no further AS-11 application anywhere. So if I buy an iPhone on 1st of Jan 2024 and I pay for that iPhone on 1st of Jan 2024 as such beta, there is no monetary item after that. iPhone is not a monetary item. Yes or no guys? It will be a non-monetary item. So in case I do not pay for that iPhone guys immediately, that is on 1st Jan, then comes settlement date and balance sheet date. So if there is a monetary item in relation to a foreign currency transaction that is outstanding as on the balance sheet date guys, you will have to restate that monetary item at the exchange rate that is prevailing as on the balance sheet date. Any resulting foreign exchange gain or loss, doesn't matter whether it is gain or a loss beta, what will you do with it? Transfer it to P&L account. After that beta, if there is settlement date, at whatever rate that you're settling this monetary item as such beta, if that differs from the carrying amount that is being shown in the books of accounts, this difference also beta will go to your P&L account. So prima facie, all your foreign exchange gain or losses as such guys will be transferred to P&L account. The exception to this rule beta is para 46 capital A. I said because there were a lot of entities as such guys that had foreign currency borrowings in India and dollar was appreciating, rupee was depreciating beta, they ended up incurring losses on restatement of all of those borrowings. This is where the standard was amended originally in the year 2008, then again in the year 2011 beta, 1st April 2011. It says in case you have long-term foreign currency monetary items, then at the option of the entity as such beta, you can choose to apply para 46A, under which if that long-term monetary item relates to a depreciable asset, the resulting foreign exchange gain or losses will be adjusted to the carrying amount of the asset, cost of the asset. If it does not relate to a depreciable asset, it will be accumulated in an account called as FCMITDA, foreign currency monetary item translation difference account, and amortized over the period of such long term foreign currency monetary item. Amortization nahi puchega, though we have covered a question, guys, as to how amortization is done and how depreciation will be provided. Usually at this level, it is only application of para 46A. What will you do with that resulting foreign exchange gain or loss? Is that clear, guys? After para 46A, beta, that is foreign currency transaction, we moved on to forward contract. I said forward contract is a contract that you enter as on the current date, beta, to buy or sell something as on a later date. If this contract is in relation to foreign currency, it becomes forward exchange contract. All right. Now, a person can enter into a forward exchange contract for the purpose of hedging, for the purpose of speculation, or for the purpose of arbitrage. If it is speculation, that means we do not have any foreign currency receivable or payable. It is just that Donald Trump is our very close friend. He called us and told us dollar badne wala hai, kharid le. So we are entering into a forward contract to buy dollars. Yes or no, guys? After that, as such, if the dollar rate increases as such, guys, you will make a profit. If Trump was lying to you as such, then you will end up incurring a loss. So that is called as speculation, guys. If you have foreign currency receivable or payable, just say, what if I sold goods to someone sitting in US, but I have to receive $10,000. Those $10,000 are receivable after 3 months. The amount that I have to receive in rupees, beta, can change depending on the dollar rate. So I want to avoid that risk. So for that, what am I doing? I'm entering into a contract with my banker to sell those $10,000 at a fixed rate. Irrespective of what is the rate prevailing in the market, beta, I will receive a fixed amount of money against those $10,000. So if I'm entering into a contract for this purpose, it is called as hedging contract. You are mitigating your risk. You are avoiding the risk of currency fluctuation. Third one, beta, is arbitrage, not a part of our syllabus, wherein you're trying to gain on account of mispricing in two different markets. Is that clear? Now, in case you are entering into a forward exchange contract for the purpose of speculation, we have used a word called as mark-to-market gain or losses. We do not care, beta, as to what is happening, guys, with the underlying product. You just have to compare what is the prevailing market price and see what is the amount of gain or loss that you have made. If you have entered into a forward purchase contract, any increase in price will be a gain to you. Any decrease in price will be a loss. In case you have entered into a forward sale contract, it is the other way around. So you do not care about the spot rate prevailing on the date of transaction. You just have to pick up your agreed forward contracted rate and compare that beta with the rate that is prevailing on the balance sheet date or the settlement date. Resulting gain or loss will be transferred to P&L account. It is called as MTM gain or losses, mark to market gain or losses. In case you are entering into a forward contract for the purpose of hedging, guys, imagine I sold goods worth $10,000 on 1st of March when the exchange rate was 83 rupees. Immediately I entered into a forward contract, beta, to sell these $10,000 at 84 rupees. Am I not receiving 1 rupee more? Whatever be the forward rate, whatever be the exchange rate prevailing, I know that I'm going to receive this 1 rupee more. Isko kya bolte hai? Forward premium or discount. To compute forward premium or discount, you should take the difference between spot rate and forward rate as on the date of contract. This forward premium or discount should be amortized over the period of forward contract. Amortized matlab transferred to P&L account. If it is for 4 months, every month you will have to transfer an equal amount as such, guys, to profit and loss account. Forward premium will be a gain if it is in respect of a receivable. Forward premium will be a loss if it is in respect of a payable. Alright, kids. That was about the accounting for forward contracts. Iske alawa, beta, we also did the accounting for foreign operations, but that was already covered as a part of your branch accounting. What is FCTR, foreign currency translation reserve? How do you transfer all of those gains and losses better to P&L account? Is that clear, kids? Any doubt in that? Alright, guys, let's quickly revise accounting standard 20, beta, earnings per share. Now, the objective of this standard, guys, is to tell us what should be included in the computation of earnings per share in the form of profits and in the form of number of equity shares. The basic definition of the word EPS, guys, is the amount of profit that is attributable to equity shareholders on a per share basis. So there are two concepts of EPS that we have in this standard. One is basic EPS, the other one is diluted EPS. Basic EPS is from the viewpoint of existing equity shareholders. That existing equity share can be on account of any reason. ESOPs already exercised is also an existing equity share. Convertible debentures that already got converted into equity shares is also an existing equity. एक बार वो equity shareholder बन गया बेटा, it's an equity share only. It doesn't matter. So basic EPS will be from the viewpoint of existing equity shares. To compute your basic EPS, beta, you will write earnings attributable to equity shareholders divided by weighted average number of equity shares. Talking about the numerator, AS-20 tells us that the amount of profit that is attributable to equity shareholders should be from the viewpoint of AS-5, which means we should take both net profit, guys, from ordinary as well as extraordinary activities into consideration. Doesn't make a difference whether it is ordinary or whether it is extraordinary. Entire profit as per AS-5 should be taken into consideration. However, there is an additional requirement, guys, that is to be given under notes to accounts. If at all you have profit or loss from extraordinary activities, guys, you will have to eliminate the impact of that extraordinary activities and then report your EPS under notes to accounts. On the face of P&L, beta, you will have to disclose basic EPS and diluted EPS from both ordinary as well as extraordinary activities. ये हो गया numerator का part, guys. हाँ, numerator में beta, when we take profit or loss as per AS-5, then comes adjustment for only one item, and that is preference dividend. Whatever net profit that they give in the question will be profit after tax. You will have to deduct preference dividend. Now, as far as preference dividend is concerned, if the shares are cumulative, whether or not preference dividend is declared as such, beta, you will have to deduct preference dividend from net profit to arrive at your earnings attributable to equity shareholders. If the shares are non-cumulative as such, guys, preference dividend will be deducted only if it is declared. By default, what is the assumption? They are cumulative. अभी तक जितने भी questions किए बेटा, if they gave us preference share capital, we have deducted preference dividend from net profit to arrive at earnings attributable to equity shareholders. After that, beta, talking about the denominator part. Normally, guys, there will be no change in equity shares during the entire year, guys. So whatever is your closing number of shares itself will be your weighted average number of equity shares. The ones who are done with FM, this is what we did in FM, guys. We directly divided by the number of equity shares outstanding. For otherwise, beta, if there are any change that is occurring in the total number of shares as such, beta, during the year, I told you there are two important factors. You will have to consider the time period for which the shares were outstanding. You will also have to convert them into a common category if you have multiple classes of shares. The conversion into common category, beta, will be dependent on the paid up value of the shares. So if the shares are issued for cash consideration, say on 1st of July 2024, you will not take them for entire 12 months, guys. You will take them only for 9 months. You will write into 9 by 12. If you are making a call, guys, on say 1st of September on 10 lakh equity shares and 1 lakh shareholders do not pay, then you will only take on 9 lakh shares. Plus, because the call is being made on 1st September, you will take only for 7 months. You will not take for the entire year. So you should take the paid up value into consideration. You should also take the time period for which they were outstanding. If I have 10 lakh shares, guys, of rupees, I did multiple examples, beta. Just say example 1, you have 10 lakh shares of 10 each, nothing else. Weighted average number of shares will directly be equal to 10 lakhs. Example 2, beta, I had 50,000 shares of 10 each issued on 1st July. Because they were issued on 1st July, those 50,000 shares you will take for 9 months. If you have multiple categories, beta, like this, where different face, there are different face values and different paid up values, you will have to convert them on the basis of paid up values. Are we clear? The exception, beta, to this rule is if at all there are bonus shares issued, if at all there is stock split, if there is reverse split, if there is consolidation of shares, they do not result in any inflow or outflow of cash. Because they do not result in any inflow or outflow of cash, beta, what are we supposed to do? Consider them from the beginning of the earliest reporting period. Even if bonus shares are issued on 30th of March 2025, guys, even if they are outstanding only for 1 day, I will have to assume that they were outstanding for 2 years. The date of issue of bonus shares, date of stock split, date of reverse split is not relevant. You will have to consider them for the entire time period. If at all you have right shares, guys, because right shares are offered at a price lesser than the prevailing market price, guys, I said right shares will have both cash component as well as bonus component. For this, the very first thing that you will have to do, beta, is compute X right price. Once we compute X right price, whatever is the consideration that is receivable from the shareholders, guys, under rights issue, you will have to divide it by X right price. That will tell us, beta, what is the cash component. How many shares are you issuing at a fair consideration? If at all total number of shares issued are 1 lakh and this cash component is 75,000 beta, then your bonus component will be 25,000. समझ में आ रहा है guys? You will consider that bonus component beta right from the beginning, but cash component will be considered only from the date of issue. It is only in right shares beta that you will have both cash component as well as bonus component. Any transaction with an outsider, there will not be any bonus component. Are we clear? Next, I said ICIMA beta, instead of this, there is something called as a right adjustment factor. How do you compute right adjustment factor? Cum right price divided by X right price. This, if you multiply by existing number of shares outstanding, you will get total shares including bonus component. Are we clear? After that beta, we moved on to the concept of diluted EPS. To understand the concept of diluted EPS beta, we first defined a potential equity share. A potential equity share is any instrument or any contract as such guys, under which the holder is entitled to get equity shares on a later date. The examples of potential equity shares are share warrants, ESOPs, convertible preference shares, convertible debentures. Share application money received can also be considered as a potential equity share if and only if the amount that you have received from those application money is already deployed in the business. You started using the money better, but you did not issue equity shares yet. Only then you will consider them better for the purpose of diluted EPS. Now, this potential equity shares, you will have to first decide guys whether they are dilutive or anti-dilutive. To check whether they are dilutive or anti-dilutive as such guys, you will have to see what will be the impact of that better on your EPS. If a potential equity shares guys has an impact of increasing your EPS guys, it is anti-dilutive. If it has an impact of reducing your EPS, then it will be dilutive. You are supposed to consider only dilutive potential equity shares. Anti-dilutive potential equity shares should not be considered. Objective is to report the worst possible EPS. If anything is going to increase your EPS beta, you will not have to report that. Are we clear? Now, starting off with the first example beta, convertible debentures. Here you will compute EPS beta assuming that convertible debenture was in the form of equity share right from the beginning. If your convertible debenture was in the form of equity share right from the beginning, you wouldn't have paid interest and your number of shares also would have been higher. So increase in earnings would be interest net of taxes. Increase in shares will be the number of shares beta that are given to convertible debenture holders. Are we clear guys? By including increase in earnings in the numerator, increase in shares in the denominator, you're going to compute your diluted EPS. One point that you're supposed to remember here beta is, if the convertible debentures were issued during the year, say they were issued on 1st of July 2024, interest net of taxes will only be for 9 months. Number of shares also should only be for next year. When I compute guys, I will take it for the entire year. I will take increase in earnings for 12 months. I will also take increase in shares beta for 12 months next year. But in the year of issue beta, you will take only for 9 months. I also gave a scenario where convertible debentures got converted into equity shares. If the convertible debentures got converted into equity shares as such guys, from the date of conversion, they will be considered guys in the computation of basic EPS. Till the date of conversion, they should be computed. They should be included in the computation of diluted EPS. समझ में आ रहा है नहीं आ रहा है? I told you though that is not normally asked in the examination, you should still know that guys. इसके बाद में, if it is a convertible preference share as such guys, the answer is pretty simple. Increase in earnings will be equal to the amount of preference dividend. Increase in shares as such beta will be equal to the number of shares that preference shareholders are entitled to. This is how you will compute. It is exactly similar as convertible debentures except that there will not be any tax savings. ESOP mein guys, because the shares are issued to employees at a price lesser than the prevailing market price beta, you are not receiving fair consideration guys for all the shares. So what you will do beta is first compute what is the amount of consideration that is receivable guys on account of ESOPs, and then divide that consideration receivable by fair value of the equity share. Once you divide it by fair value of the equity share guys, you are going to get the number of shares beta that are being issued if the shares were issued at fair price. You will ignore this component altogether and you will only take the balance part. Say for example beta, I am issuing 1 lakh shares at a price of 15 rupees. I am receiving 15 lakh rupees. If the fair price of the share is 100 rupees as such guys, 15 lakhs divided by 100, I would have issued only 15,000 shares. I will ignore 15,000, take the balance 85,000 shares for the computation of diluted EPS. Any doubt in this guys? This is on account of ESOP. Next beta, if you have multiple potential equity shares, what are we supposed to do? You are supposed to rank them, guys, in the order of dilution. What will happen in the process, beta, is something that is dilutive on the face of it may become anti-dilutive. Are we clear? Kuch nahi hai. Rank them in the order of dilution and then include them in the same format. Keep including it as long as the EPS is decreasing. The minute EPS starts increasing again as such, beta, you should ignore it. That cannot be considered for your diluted EPS. Next, if there is a loss-making entity as such, guys, what will happen? Potential equity shares, guys, will always be anti-dilutive. However, if there is profit from both continuing as well as discontinuing operations, guys, to decide the nature of a potential equity share, we should consider only profit or loss, beta, from continuing operations. We should not consider profit or loss from discontinuing operations. Once you decide whether a security is dilutive or anti-dilutive, beta, based on that, after that, to report basic EPS and diluted EPS, we should include both. Are we clear, guys? We are supposed to include both profit from continuing operations as well as discontinuing operations. That option you will not have. This is after you decide the nature of potential equity share. Now, diluted EPS is something, beta, that is required to be reported only by level 1 entities. That is by non-SMCs. Other than the smaller entities, beta, need not report diluted EPS. Exemption is given as such, guys, as per the accounting standard rules. Alright. ये पार्ट अपन नोट्स में नहीं लिखे थे, नेक्स्ट सेशन में लिखा दूंगा बेटा. दैट योर डाइल्यूटेड EPS इज समथिंग दैट इज टू बी रिटन. आई विल मेक यू राइट इन द नेक्स्ट सेशन, डोंट वरी अबाउट इट. ऑलराइट, चलो बेटा, दैट्स द एंड ऑफ द सेशन. यू गाइस हैव अ ब्रेक नाउ. ऑनलाइन स्टूडेंट्स, ब्रेक. नेक्स्ट रिविजन, गाइस, अकाउंटिंग स्टैंडर्ड. हमको मन की शक्ति देना. हाँ, नेक्स्ट अकाउंटिंग स्टैंडर्ड, गाइस, AS-26, intangible assets. The best part about this standard is that this standard is based on the most simple accounting principles that deal with asset recognition. So you should simply know, guys, what is the definition of an asset, guys, what will be the recognition criteria of an asset, how are you supposed to recognize an asset better initially, and how are you supposed to recognize an asset subsequent to the balance sheet date with Shakal Siddhi. So when we say asset, guys, an asset is a resource which is within the control of the entity arising on account of a past event, guys, which is expected to result in future economic benefits. Now, usually, guys, every expenditure might result in future economic benefit, guys. What is most important in the entire definition of the asset part is the controllability. If it is not a resource within the control of the entity, guys, it does not satisfy the definition of the word asset. So that is what you will have to check. And any asset recognition criteria, guys, I've explained so many times in the class, there are only two conditions. It is probable that it will result in future economic benefits and cost can be measured. As long as these conditions are met as such, beta, you will be disclosing it as an asset. Now, first, guys, in this standard, we have learned about the definition of the word intangible asset. An intangible asset is an identifiable non-monetary asset without any physical substance that is held for use in the production of goods or rendering of services or for rentals to others or for administrative purposes. यहाँ पे बेटा identifiability, that means you should be able to identify which asset are we talking about. Non-monetary, you should not have any right to receive a fixed amount of money against that. The definition of monetary and non-monetary is given under accounting standard 11. Anything against which you have a right to receive a fixed amount of money as such, beta, becomes a monetary asset. If you have the right to receive a fixed amount of money, it is a receivable. It will no longer be an intangible asset. Intangible asset has to be a non-monetary asset. It should be identifiable, non-monetary, without any physical substance. वो जो आगे का part है बेटा, that basically means that it is being used for the purpose of business activity. क्या business activity? End of, मतलब not related. Either for administrative purposes. The word administrative, beta, is a very wide word. It is not literally administrative. It can be selling and distribution function. It can be any function of the organization. As long as you're using it for the purpose of business, it will be an intangible asset. I spoke about the physical substance part, beta. I said if a tangible asset and an intangible asset are combined, if they can be segregated, first priority, segregate them and record tangible assets separately and intangible assets separately. If they cannot be segregated as such, guys, you will go by the predominant element. If it is a tangible portion that is the predominant element, you will record that as a tangible asset. Otherwise, you will record it as an intangible asset. Are we clear? The right to operate an airport, telecom licenses, highway licenses, guys, OTT platforms से जो music rights रहते हैं, movie rights रहते हैं, telecasting rights, all of them beta are intangible assets. All right. Next, beta, after this, we moved on to the recognition criteria. I just told you, beta, 2 minutes back. Recognition criteria is exactly the same as asset recognition criteria. It is probable that there will be future economic benefits, guys, and the cost of the asset can be measured. If agar condition satisfied hai beta, you will be able to disclose an intangible asset in your books of accounts. Initial recognition of any asset, beta, will always be at cost. That is why, beta, we spoke about cost of an intangible asset under this. If an intangible asset is being purchased, guys, whatever is the purchase price plus import duties, and import duties by default are non-refundable. Import duties, any other non-refundable duty, professional fees should all be included in the cost of the intangible. If you are acquiring an intangible by issuing your own shares, the cost of the intangible, beta, will be the fair value of the shares issued or the fair value of the asset acquired, whichever is clearly evident. If you are acquiring an intangible by exchanging an asset as such, guys, it is similar to issue of shares. If it is by way of government grant, if it is free of cost, nominal value, if it is at a concessional rate, actual cost. If at all you are incurring expenditure that does not result in any creation of an intangible asset as such, guys, you should not recapitalize that expenditure. You should be transferring that to P&L account immediately. Employee training costs, relocation expenditures, startup costs as such, guys, brand promotion, all of these expenses result in future economic benefits, but they do not result in any creation of an asset which is within the control of the entity. That is why all of these expenses are immediately transferred better to P&L account as and when you incur those expenses. However, this accounting standard does not apply to any source of capital better like debentures, equity shares. So if at all you have any expenditure in relation to sources of capital as such better, you do not have to write them off immediately. You can continue to disclose them better as an asset in your balance sheet. Though that asset does not have any value better, you can continue to disclose them in your balance sheet. You need not write it off immediately. If there's any internally generated intangible asset, guys, you will be able to recognize internally generated intangible asset, guys, provided recognition criteria is met. It is probable that there will be future economic benefits and cost can be measured. As long as these conditions are met, beta, you will be able to disclose it. Problem with internally generated goodwill, beta, is that we will not be able to measure the cost of creating goodwill. That is why, beta, it fails the recognition criteria and we cannot disclose internally generated goodwill in the books of accounts. The most important internally generated intangible asset is research and development expenditure. A lot of organizations spend billions of dollars as such, guys, on R&D activity that will satisfy the recognition criteria as such, but and hence it can be disclosed as an asset in the balance sheet. For this, you should know how to differentiate between research phase and development phase. During research phase, guys, we do not know whether such a thing is possible or not, whether such a thing exists or not. Because you are not sure about the end result as such, guys, it is not probable that there will be future economic benefit. That is why whatever we incur during research phase as such, guys, should be transferred to P&L account. Once the research phase, beta, is positive, whatever that we are incurring during development phase as such, guys, can be capitalized, again, provided the firm has technical feasibility, it has financial resources, technical resources, it has the intention to complete the asset, it has the ability to use the asset as such, beta. Only then the expenditure incurred during development phase can be capitalized. The point to be noted here, beta, is that the amount that you're capitalizing in respect of any asset cannot exceed the recoverable amount of the asset. Recoverable amount is basically the benefit that you're going to derive from the asset. From an intangible asset as such, beta, usually you derive benefit by using the asset, which is termed as value in use, present value of all the future cash flows, or by selling the asset. अपने questions में net selling price नहीं देता. He will only give value in use. That itself will become recoverable amount. And in almost every question, the expenditure incurred during development phase as such, beta, was more than recoverable amount, and that is why we had to transfer the excess amount, beta, to profit and loss account. You cannot disclose an asset at a value more than its recoverable amount. This is what you should know. After that, guys, any expenditure that you have incurred in the past that was already transferred to P&L account can never be subsequently capitalized. Recognition criteria should be checked at the time you are incurring the expenditure, not as on a later date. I gave an example for this, beta, that if research phase was up to 30th March and development began on 31st March, only that one day's expenditure, beta, will be capitalized. Everything that you have incurred till 30th March will be transferred to P&L account. Any subsequent expenditure as such, guys, that you are incurring in respect of an intangible asset can be capitalized provided the recognition criteria is met. When you say recognition criteria, beta, it is probable that there will be future economic benefits and cost can be measured. ये जो फ्यूचर इकोनॉमिक बेनिफिट वाला पार्ट है बेटा, इट शुड बी इन एक्सेस ऑफ द ओरिजिनली असेस्ड स्टैंडर्ड ऑफ परफॉर्मेंस. Only if you are getting a benefit more than the existing as such guys benefit, you will be able to capitalize. I gave examples better of how operating systems के नए versions are rolled out. Are they not incurring subsequent expenditures as such guys on that? All of that will be capitalized. Is that clear guys? Next. Subsequent measurement. Once the asset is capitalized as such guys, as on the balance sheet date, an asset will be reported net of amortization, net of impairment losses if any. Amortization is covered under this standard, impairment is covered under accounting standard 28. We'll talk about impairment there. Like how you have depreciation in respect of fixed assets, tangible assets better, we have amortization in respect of intangible assets. There are three important factors as such guys that will determine the amount of amortization. You have residual value, useful life, amortization method. इसके अलावा cost, we have already covered cost. Now as per this standard guys, the useful life of an intangible asset is basically the time period over which you're going to derive economic benefit. However, the useful life of an intangible asset cannot exceed 10 years. It is presumed better that the life will be 10 years unless there is an evidence of a higher useful life. Example for this again better is licenses. Usually if the license to operate is 25 years, you amortize it over 25 years. You do not have to amortize over 10 years. अपने पास पेटेंट है and you are telling नहीं, I know that I will be able to use it for 20 years, doesn't matter. You will have to amortize it over 10 years only. It cannot exceed 10 years. For softwares, it is assumed to be 3 to 5. This is about useful life. Talking about residual value. This standard says that the residual value is assumed to be 0, except there are two cases. Either there's already a commitment given by a third party to purchase the intangible asset at the end of its useful life, or there is an active market for the intangible asset, and it is probable that the active market will continue to exist at the end of its useful life also. Only then you can consider residual value. Amortization method. It says the cost of the intangible asset should be amortized based on the pattern of economic benefits. If the pattern of economic benefits cannot be established, straight line method should be used. Are we clear? If you cannot establish the pattern of economic benefits. Residual value of an intangible asset cannot be subsequently increased, you can only decrease it. Useful life as such guys and amortization method, both of them are considered as change in accounting estimates, and that is why you should be reviewing them at the end of every year. Whenever an intangible asset is retired from active use and is held for disposal guys, you're supposed to state the intangible asset at its carrying amount as on the date of retirement. Matlab no subsequent amortization. Thereafter you will compare the value of that asset as such better directly with the net selling price. If at all there's any expected loss, it should be transferred to P&L account. Also the loss on actual disposal of intangible asset will be transferred to P&L account. That's it beta. This is what we have covered under accounting standard 26. Alright guys, we'll divide something else. हो जाएगा यार. AS-7 भी नहीं हुआ बोले तेरा. 7 and 20 भी नहीं हुआ था. Alright, but online students, I'm ending the session. See you guys tomorrow. Bye bye. End of session, guys. No more revisions. Bye bye.